Hello and a warm welcome to the Open Treasury podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by CTMfile.com and the Treasury News Network, where treasury professionals learn and share the information that matters most. My name is Pushpendra Mehta, and my guests for today are Jack Large, editor of CTMfile, and Craig Jeffery, managing partner at Strategic Treasurer. Welcome to the Open Treasury podcast, Jack and Craig. This week, we are focusing on 5 themes. We'll discuss India switching to non-dollar payments to close trade deals with Russia, the slowdown of the Chinese economy, Citi introducing a time deposit solution based on sustainability, Iran placing its first cryptocurrency import order, and finally, the proliferation of deepfake technology posing security and reputational risks for CFOs, CEOs, and treasurers. You can read these articles and also research content more deeply by visiting CTMfile.com or by following the links in our show notes. Let's begin our discussion with the first section that revolves around Indian companies using non-dollar payment for trade with Russia. India, as you know, has strong ties with Russia dating back to the Cold War to counterbalance Chinese hegemony in their shared neighborhood. Now, Indian companies are using Asian currencies more often to pay for Russian coal imports, according to customs documents and industry sources, avoiding the US dollar and cutting the risk of breaching Western sanctions against Moscow. Last month, 31% of India's non-dollar payments for Russian coal were made in Chinese yuan, while 28% were made in Hong Kong dollars. Data from the trade source shows that the euro made up less than a quarter of the total and the Emirati dirham about a sixth. Russia has overtaken China as India's third largest coal supplier. In addition, India's central bank, the Reserve Bank of India, has approved payments for commodities in Indian rupees, which New Delhi anticipates will increase trade relations with Russia. Jack, if I may start with you, my question to you is that does India's rupee move to trade with Russia have underlying global de-dollarization implications?
No, it's just a natural consequence of international trade and the ebbs and flows of, particularly now you've got the tension of the invasion of Ukraine. But this has always been going on. I mean, what's inevitable is that we're getting global warring between currencies, and this has always been the case. I don't think it's particularly bigger than normal in my experience.
Yeah, I'm going to have to agree with Jack again, unfortunately. There's long been a push to move towards de-dollarization, particularly among China, Russia, Iran. I mean, North Korea would love that as well. I mean, some of the use of the currency can cause them some frustration, but also global markets, messaging on SWIFT. There's all of these issues where it's harder to do what you want to do, particularly with Russia now with their invasion. So There's been a push back since before Russia invaded and annexed Crimea. This is a continued push. But when you look at those, China, Russia, Iran, other ones, those still account for less than a third of the global economy, in a small number of countries. So it's, just the ongoing back and forth.
The new piece for me is that they are using the Emirati currency from Saudi Arabia, which is new for me, and I think it's also going to be something that we're going to see more of as countries cope with the tensions.
Moving forward, our next section pertains to Beijing's zero pandemic policy and the real estate crisis that has caused the Chinese economy to slow down. To boost demand, China's central bank unexpectedly slashed its lending rates on Monday after July data showed decline in economic activity that sent oil prices down sharply and reignited concerns of a global slowdown. Craig, when you hear of the Chinese downturn amidst its COVID outbreaks and a fragile property market, From a treasury perspective, what are your major concerns?
Well, since they're 19% or 20% of the global GDP, their key role in so many of the supply chain activities, can have much more ripple effects when they go south. Just like if the U.S. has a recession, the world has a recession. There's not quite as significant of that, but certainly important. The supply chain, they're having a big impact on the supply chain. I think most of us would say overreaction to, outbreaks of COVID now in 2022, where they shut down entire cities and stop much of their supply chain fulfillment, creates a big ripple effect. This is a supply chain impacts not only their economy, but other economies as well. That's why we see shortfalls in different places. So that combined with inflation, increasing interest rates, a softening of the economy. We look at the U.S., we went into a recession in the second quarter, decrease. I think we usually have a pretty good feeling about most of the Western countries reporting of economic data and GDP. That is, I don't know any economists who really trust the numbers that are put out there. It decreased. Did they go into recession? They narrowly avoided it. Who knows if that's more of just information that's put out there, but the softening's been pretty hard. So with China goes, so there is an impact and a heavy influence across the globe. So this is, the headwinds are there. In the supply chain, the headwinds are there with the economy in China. I mean, they're softening, particularly in property. And we've had a number of these discussions about some of the large, commercial property and large commercial entities there having significant issues and some bankruptcy, or insolvency. So concerning for China and for the other parts of the world.
Jack, would you have similar opinion or anything else to add?
It's just another example of how China is becoming much more a mature economy, and inevitably they get consequences of low consumer spending, for example. Mind you, it's not surprising given the avid and huge impact of the resources, the reaction to the COVID crisis. But it's just part of maturing the Chinese economy. The one thing that we don't know, and Craig referred to it obliquely, is how real the stats are. There is definitely some fiddling of the stats. Exactly how much, I don't know.
The next section revolves around ESG. There has been a steady increase in treasurer commitment to ESG and sustainability over the past 2 years. Now, Citi's Treasury and Trade Solutions division has introduced a sustainable time deposit solution for corporate and institution clients in Singapore and Hong Kong to fulfill client demand and interest in sustainability-related products, services, and investment opportunities. Jack, I know ESG is very close to your heart. What do you make of Citi Group's new sustainability solution? And do you think ESG and sustainable finance is becoming a part of corporate treasury's DNA?
To the last part of your question, yes, it's become an essential part of corporate treasury. Sustainable products are being demanded by investors, by all types of investors. What's interesting about Citi is that they started this program some time ago in 2015, and they have set up some lovely words and how they comply with United Nations framework and demands. And they split their program into 3 areas: environmental finance, environment and social management, and then operations and supply chain. They've done it very well and it reads very well. The issue, though, is how much take-up they're going to get for this new investment. The comment by the Citibank senior guy in charge of the program was saying he's looking forward to convincing his clients to partake of this. And that shows the level of difficulty of selling this sort of thing to corporates. They're still very cautious.
Yeah, I think when we look at ESG and some of these investments and Citi's initiative here, I think we have this inclination that if it's about ESG or if it's about this type of bond or this type of activity, whatever the topic is, not just ESG alone, that that there is going to be a wholesale shift in investing or activity in a very, very short period of time. Like here, these things take a long time to make the shift. So things like corporate, investment policies, adding ESG or a percentage of investments into ESG certified or designated investments. Those take time over a period, just like we saw the European Central Bank. They have a 10-year plan to move their portfolio into those assets. So I think we need to look at these things from a multi-year perspective, and the balance of supply and the balance of demand will shift over time to meet those. And when they get tight, you'll see them become more affordable or less affordable, and a rush there based on those initiatives, regulations across the board.
Because of the climate crisis, which is building all the time, the attitudes might change much quicker than we've predicted in the past. And I hope they do, because we're in serious trouble.
The next story is about Iran placing its first official import order using cryptocurrency. The US $10 million order is reportedly the first step that Iran has taken to use cryptocurrencies to settle cross-border trade deals, as it continues to look for ways to avoid using the US dollar and bypass the international banking system. In the light of what Iran has done, do you think more countries would be encouraged to use cryptocurrencies to reduce the use of dollar in the bilateral trade and or as a way of circumventing US sanctions?
I'll take a step back on that for a minute. So, Iran is, we would consider it a pariah state in many ways, at least the top of the organization, not all Iranians for sure. In the U.S., fairly recently, there was this stabbing of Salman Rushdie, who he was attacked on stage. He's 75 years old. Iran has put out a bounty on those that would kill him. Now, they've denied it and say nobody can make accusations about that. But there's a huge bounty put on that, a reward for doing that. A fatwa was issued against him. And so when we see that type of activity, we don't expect people to play by what we would consider norms of reasonable behavior, not just good behavior globally. Certainly they're trying to get around the punishments or restrictions that can happen with sanctions that U.S. places on U.S. and other countries, or the UN places on countries that are engaged in different types of very bad behavior. And so the use of the cryptocurrency to try to avoid that is expected. And we do expect to see more attempted sanctions avoidance. How do you get around when you're getting punished or cut off? You still want to run your country. And so you're going to pursue these. There will continue to be trades that occur, cryptocurrency. I don't know how big it'll be to make that work, right? It's based upon how much people place value in the cryptocurrency, not on any country's taxing ability. So there's value there, but it has a different foundation to where the value is.
The evil of Iran is clear from all their different things going on. But the other take on this is that it's an example of cryptocurrencies becoming more and more important and becoming part of the international trade infrastructure, but also the intra-country trade as well. We are going to see CBDCs in many countries around the world. And it's posing the question, which that corporate treasurers, I think, don't have their head around yet, is how are they going to deal with this, both on accepting the transactions, but also doing the accounting and the investment and so on. It's a whole new ballgame. It really is the newest dimension for corporate treasury.
Zarade's book, Treasury's War, covers a lot about how central banks have worked to shut off financing for things like terrorism and using that as a way of identifying and restricting items. And some of the activities around cryptocurrencies are meant to be anonymous. Central bank digital currencies are not. So this is kind of that ongoing push. I think there's going to be a push for I don't want to be taxed, or I'm engaged in bad activities, or I just like the anonymity of it. There's a whole range of who may use that. But now that there's governments using it and businesses using it, this is, again, I think we've said this a lot of times, this is something to continue to watch and see how this plays out between central bank digital currencies, other more independent cryptocurrencies, and sanctions, that feedback loop from that.
Very interesting perspectives. The next story, I'm sure both of you will have a lot to say about it. This story is about the serious and damaging cyber attack vector, deepfake technology. The word deepfake is composed of the terms deep learning and fake, and refers to the use of artificial intelligence and machine learning to create, replicate, impersonate, or doctor someone's audio, video, images, or text to create entirely new content that seems real and is quite difficult to distinguish as false. Deepfake technology first appeared in 2017 and has since proliferated. CEOs, CFOs, and treasurers have a direct line into an organization's finances, so they are likely to be a target of deepfake attacks. Deepfakes can be created using their conference presentations, media interviews, earnings call, or from any of their audio or video footage that is already in the public domain. Organizations have to equip themselves to safeguard their finances, brand, and executive reputation against the growing threat of deepfake attacks. Jack, if I may start with you, given your experience with Treasury and cybersecurity, how do you think CEOs, CFOs, and treasurers can prepare and guard their colleagues and organization against malicious deepfake threats?
First, I'd like to say it's a really good article. It gets to the heart of where the problem is. But actually, we've had this problem forever. It's just the technology used has changed. So the awareness and the tools that the CEOs, CFOs, and treasurers have to deal with is much greater now. But the problem is still the same. So they need to train your staff. Now, it's trained not on just making sure that the person is ringing from the right place and so on, but also doing a voice print check as well. That's all new, but the discipline remains the same. The scale of what can be achieved is booming, as your example, a couple of examples you quoted shows, but the discipline remains the same.
Yeah, I think that last point by Jack is quite good. The discipline remains the same, and some of the discipline is using multiple factors to authenticate activity. And we have to think about it differently. This one example that was shared in the article about there was written communication using technology to provide instructions for moving funds. There was also the use of voice cloning, giving the same type of instructions. So now it's like, hey, I've got voice and I've got written confirmation. Now, we have to be more rigorous about it. It's not just from two sources because those are sent in externally. You originate one of those methods. Make sure you're going to the right place, not taking two different types of inbound communication that says, move it to this account that we control and can get money out of the organization. It's really doubling down on the rigor that we have, both the education that we have, but understanding that voice you hear may not be the right one. It can be simply lifted from earnings call releases, can be captured from public speaking and then integrated through software that's not expensive. On the voice side, even the visual deepfakes like an audio call can be, audio video call can be accomplished without not nearly the level of effort that would have been required a decade ago. So the idea of how these criminals are trying to compromise systems, people, and communication, they're poking at all different ways. I want to get into your system to send the funds myself or gain control of it, or I want to convince you to do it, and I might need multiple methods to do it. I can no longer just have a great email that does it. I need a couple other corresponding actions to do that. And so they're probing both in corporations and at banks. When you have controls set up at banks, they're trying to remove controls that are set up or provide authorizations to allow certain types of transfers to go through. So it's a extreme need is to be wary and to get updated education on payment fraud and some of these different attack methods, vectors, and situations.
The other aspect Craig didn't really cover in the article is that corporates need to demand of the banks better protection by voice prints, by all sorts of different other things. And what would be useful for corporates is a list of things that they should be asking for from banks. The trouble is, once you publish that, the fraudsters will get onto that and they will try and use that to generate more fraud. It's a never-ending game, I'm afraid.
A never-ending game it is. Finally, I would like to wrap up this conversation by seeking your opinion on your choice for the biggest or the most important story of the past week and why. Craig, if I may start with you.
Yeah, normally I have one picked out ahead of time quite well. I guess I'm going to go with the China's economy taking a downturn. I think that's impacting the globe. We're seeing the recession in different parts of the world and likely China. And just seeing that softening there, I think that's the biggest one for the ripple impact, because that has an impact on interest rates. It feeds into the cost of currency hedging, which has become more expensive. That's probably the biggest individual one for this particular week for me.
I agree with what Craig said about that. I think the other feature of this topics that we've talked about is the continuing emergence of cryptocurrencies coming into everyday language, everyday thought, everyday planning. And corporate treasury needs to get its head round how they are going to cope with cryptocurrency becoming a fact of life, a standard way of life, both for international but also for domestic payments and investment.
That was a very insightful conversation. A big thank you to you, Jack and Craig, and to our CTMfile audience for joining us on this edition of Open Treasury. Please subscribe and look in the show notes for the article links. Thank you. This podcast is provided for information purposes only, and statements made by CTMfile or guests on this podcast are not intended as legal, business, or consulting advice. For more information, visit ctmfile.com.